Well, I think there's going to be a bit of a diverse landscape in the energy markets over the next few years. If we break it down by commodity, the oil space looks generally constructive with everything going on with supply side rebalancing, supply intervention out of OPEC, demand is picking up. Yes, you're going to get US coming back strongly in terms of supply, but generally we see balances shifting to a positive direction. So we could see oil prices moving $10 or so higher than where they are now. Gas markets, it's a bit of a differing story, a tale of two landscapes. In the US, things are looking a little bit more positive. The US supply has been rationed in a bit, and you've got a strong pull in the export market, both from Mexico but from LNG as well. But that pull from LNG that's supportive for the US market is a detriment to both European and Asian pricing, in that already there's a pretty well supplied European market from the likes of Russia, Norway, Algeria. So if we add in this LNG from the US, but also from Australia, from Qatar, you're going to see a dampener put on prices throughout there. So we're pretty sanguine, not just 1-2 years, but a little further out in terms of gas markets in Europe and in Asia. And then finishing off with coal, with a fairly sanguine view on gas markets, then it's difficult to be too constructive on coal. So we're generally a little bit more bearish on the coal side of things. You're going to get supply come back from China that's been taken off, but there's still some constructive themes. Chinese demand hasn't been doing too badly. So even though we're a little bit bearish on coal, there's going to be some support there. So it's a bit of a mixed bag across the landscape.